Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for visiting the lab today. This stream is about integrating Bookmap order flow tools with auction market theory using a volume profile as a chassis in the intraday developing time frame. It is based on structured trades, and there are 60 PDFs of these trades that you can download at the Bookmap Discord Trader Lab. And there is a link in the bottom of YouTube for those of you who are interested not only in these structured trades, but also the auction, why the volume profile might be an appropriate tool for some of you, and how to integrate these tools with order flow into a potentially cohesive trading process or plan. Trader Lab is a group of like-minded traders that have come together to leverage their collective experience. It doesn't matter how you approach the market or what you do. What does matter is, do you have a plan that actually has a statistical edge? Most retail traders do not understand what the real business of trading is. The trading business is really a gaming business. In other words, the same way as casinos operate. And to put it simply, trading is about edge or probabilities. It's not about predictability because we can't predict what the other participants will do or any external piece of news that might come into the market and disrupt our trade. What we can do, just like the casinos do, is only interact with the other participants when we have a statistical edge. That is what gaming is. And if you step back and think about it, the casinos are not trying to win every hand, though I'm sure they'd like to. But they understand that for the gamblers to come to the table, that the gamblers also do win and do walk out of the casinos with cash. There is a random distribution of this outcome. The cards coming out of the deck are random. The way gamblers play their cards are random. So everything is random. So what is not random? It's the casinos, how they play the games. And they play the games exactly the same way. No variable inputs. Blackjack's always 7 cards. They always cut the deck a certain way. They shuffle it. They do everything exactly the same. Why? Because the only way they get to realize their edge and extract it from the gamblers is by playing the game exactly the same way. Now, if we accept for a moment that we are also in a random environment and participant behavior is random and everything else, then aren't we the same as casinos? If we are operating like a casino, then we're going to have losing trades. We are going to pay overhead and cost of production because we're in a business, and we should only interact with the other participants when we have an edge. The Trader Lab is built on the concept of building a plan, building a business, only interacting when you have an edge. And of course, there's a number of pieces that go into that, and you're all invited to visit the Trader Lab. And there is no cost to be part of the Trader Lab community and take advantage of not only the structured trades, but the library of webinars that are available and all the additional education that Bookmap server in Discord server provides. Stocks, options, crypto, order flow with a high tier tool like Bookmap, and much more. Options, market maker behavior, and there's a lot more. So that is available to you, and I want to bring that to your attention. Now, we're going to today grab a pen and a piece of paper. I'm going to show you what we do in Trader Lab. And please understand, there is no holy grail. We all take stops. We all have losing days. This is the business. If those are things that psychologically are going to keep you up at night and disturb you and are not aligned with your ability to get in alignment with a gaming or random process, then trading will not be for you. And I am not one of those individuals that are going to say everybody can be a successful trader. But I do believe if you do the work, you can learn how to trade. Now, the next element will be, in my opinion, my experience, is conquering your emotional obstacles to actually operating in a completely uncertain environment. That is the thing, I think, that is the biggest obstacle, assuming you actually learn how to trade. How to trade and being able to trade are separate elements. And I believe you can learn to trade. The other element, there are ways to manage that, but that is psychological alignment and something that actually might be a little bit more of an obstacle because of our wiring. as human beings, fight and flight and that kind of thing. General disclosure, all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Please grab that pen and paper. I'm going to give you a couple of things for you to take a few notes on. Risk disclosure. Trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. I'm going to be sharing structured trades with you that are based on the process I have shared in the Trader Lab and statistics. And remember, the Trader Lab is a group. It's a team effort. Nobody has a monopoly on brilliance. We're all human. Things work. Sometimes things don't work. Sometimes the things work and we don't work because of our emotions. All of that's part of trading, and we're always working every day to get better. There is no holy grail. Doesn't exist. If you're still tuning, tweaking, multiple time framing, a little of this, a little of that, trying to make a trading stew, that's not a recipe for success, in my opinion. So grab your pen and paper. Let's take a look at the Bookmap, the order flow, and let's go see what is going on. Now, the stream integrates order flow as a way to see participant behavior in microstructures. But then we are overlaying behavior in something called fractals using structure. Now, I'm wondering if you guys remember, yesterday we were on the long side, and that's all fine. That's history. But let's look at what we have. Here's yesterday's high. Here's yesterday's naked volume point of control. Now, these are auction-based targets. And what is an auction? Very simple. The auction is really price discovery process. It's really what the market does. It tries to figure out what's too high, what's too low. Great. And also retail. Retail, in the way I define it, is like shopping, a price where high volume takes place. Buyers and sellers come together, and they agree on a price. Now, the interesting thing in the developing time frame that we trade in is primarily day traders. And by the way, this process works all time frames. Swing trading doesn't matter, because the process is generic. So this process operates in multiple time frames or fractals. The other part of it is it happens when you go down into microstructure. High volume is retail. Now, consolidations are kind of like little stores. And I'm simplifying it because everybody thinks trading is complicated. It really isn't. It's actually simple. We think that the secret sauce is in the complexity. Actually, it's in the simplicity. So anytime we create complexity, we actually create obstacles to our ability to actually make decisions quickly, which is important. So this was the highest volume from yesterday. So consider this our retail price. In the ETH, the overnight volume point of control, same as this, except the ETH, this is the last auction. So what we have is maybe this is too low. This is the retail price. Here's yesterday's high. Here's the ETH mid. Here's the ETH high. And here's something called the microcomposite volume point of control. What is this? This is a volume point of control. This is the ETH volume point of control. These are like retail yesterday, highest volume. The last auction, which is the ETH, highest volume. You notice this one is higher than this one. And then the microcomposite volume point of control, this is an intermediate time frame. So higher time frame point of control. So more volume because a microcomposite is actually a large consolidation made up of RTH days. That big consolidation, and where's the volume in these multiple days? This is where's the volume from the ETH, and this is where's the volume, high volume from yesterday. So you can see the fractals. So that's where we're starting. Now, a couple statistics and we'll go. We're opening, got to get this all back together again here. Where is that open? I believe the open covered up here at the second. 1 second, let me find it. I think it's at 25 and change. Guys, can you confirm where the opening print was? I think it was like 25.75 or something like that. Does that sound right? $26. Okay. So this is the RTH open right here. Now, in this context, write these numbers down. And past performance, not indicative of future results. You got to vet these for yourself. Getting to the overnight volume point of control is an 83% probability. Now we're going to open here. That's 83% probability. Getting to yesterday's high, let me find it. Whoa. Because there's going to be stops there and we're in an uptrend, has a high probability. The overnight high, the ETH high, got to find these things here, has about a 50% probability. However, the trend is up. Now, there's a little bit more. The overnight mid. Now, you have to kind of take everything, which, as we say, a grain of salt, and past performance, not indicative of future results. You got to vet these for yourself. 83% probability we get here. So this is not a high probability, but this is. This is a high probability. About 82, 83%, 83%. Well, if I have 83% probability to get here, and this is maybe a 49% probability, there's more. Really? Yes, there is. Overnight high, high probability. And this is the microcomposite volume point of control, 4250. Write those down. So those are the targets for the upside. Okay, so let's look at that. Now there's more. Really, there's more? Yes, there's more. Now, let's come back the other way. The ETH low has a 66%-ish probability, and the naked volume point of control, this over here, has a 70% probability. And now this one, let me see if I have this in here. I don't remember if I do or not. 5611, this is not in here. 561112, and I posted this in the lab, is a previous naked volume point of control that we broke through yesterday, which was our upside target, those who follow the stream. And we are potentially returning there. But at the moment, we're going to come back to the opening trades. Is everybody tracking so far? Now, these are important. It's important. Why do we use levels? We use levels because it's auction based. The market is not made up of indicators. It's made up of participant behavior. And I'm not saying you can't use indicators. I don't use any. I use order flow. And because the order flow gets me, you might say, where the rubber meets the road. And of course, like every tool you use, it's not a red light, green light process. It's an interpretive process. So when you're looking at microstructures like here, if you understand what's going on right here, you'll know that this is absorption. There's no buyer here. And that's what creates this rotation. I can just look at this and see this. I'm not looking at a backwards looking indicator for it to cross something over. Not what I do. So I'm saying is potentially that might give us an advantage. So let's go into the RTH open now. 8:30 Central Time, right here. So this is the open. It's right there. Thank you. And these are my targets. Overnight low, which is there and here. So the fact I'm opening here, this is above me, this is above me. I'm looking at this, and what I want to do here is have it tag this. If I come back above it, it is a long. This is in my trade plan, and then going here, here, and out the top to 4250. And this is posted in Trader Lab prior to the open. Not that anybody knows, because part of the joy of trading is randomness. So I'm going to show you the first trade. So these trades are structured trades, and I'm going to show them to you. So let's go take a look. Now remember, market opens. Now here's something else you should be writing down. Please take these notes. The market goes up to go down, and the market goes down to go up. The market goes up to go down. What have we been doing the last couple of days? Going up. And then the market goes up to go down. Settlement is here. The market goes up to go down. The market goes down to go up. So I'm looking at this, and in the ETH, we're down near the ETH low. So the market is going down in the ETH. And the retail price is here, 82% probability, 70% probability for this. So I'm going, okay, bing, bang. That's my plan. Now, if we had opened elsewhere and we went up first, then it was going to be shorts. However, what we did is we came down in the ETH, so down and then looking for longs, unless we break under here and we do the Acapulco cliff dives, because you got to be prepared for everything. This is trading. But before the market opens, and here's what's so important and what we work on in Trader Lab, and what I think those interested in actually having a business and potential career, and of course past performance not indicative of future results. Everybody's different, right? You got to know what you're going to do before you get there. Trade plan is, you don't make it up here. Otherwise, you're just playing a video game, and you might as well go to casino and get the cocktails and the ticket to the buffet. If you're going to be in the business of trading, you're basically waiting for a bus. You're waiting for your trade, and you know where it's going to be. You don't know what'll happen because that's random, and the environment is random. But if you understand how the market works, which is what we work on in Trader Lab, market mechanics, how it works, why it does what it does, and how you might get in alignment at times with it. So right here, market opens. I see some buyers, and right here I'm going, okay, I'm waiting for this. This is what I'm doing. So I'm going, okay, is this a long? I come below, this is called developing volume point of control. This yellow line is where the high volume is. Now, when we first open, it starts at 0. You'll see. You got to get back to the open here, 8:30. So right here is the developing volume point of control. Right here, so I open right there, really. I tick down, and now I come across. I am looking, remember, for this and the overnight low, which is like right there. So these are my targets. It doesn't touch them. I don't know this, of course. I'm sitting here and I'm going, what's going on? Right here's the open. So, and I see my buyers. So what I see is I open. I only have one tick. That creates the opening swing low. And of course, I'm sitting here like everybody else going, it's that deer in the headlights kind of feeling, because you don't know what's going on. I see my buyers. Now, I have structured trade, and I'm going to tell you what it is. In this environment, and again, every trade takes stops, so there's no way out of that. If you're allergic to stops, then you want to be in a business that has no bills or overhead. And unfortunately, having a business requires paying for the electric bill, the oxygen, and everything else. This here is my VPOC. And I made up terms because I started doing this. This didn't exist. So I had to come up with things. So I made them up. I call this a variable high volume node, because what it is the volume was here. And now as the pricing is taking place and the participants are auctioning, there's more volume here than there was down here. This is called VPOC migration. It is a structured trade in the Trader Lab. Now, and I'm going to show you, this is an entry actually in Trader Lab. It's aggressive, and I always suggest developing traders don't trade this, because you have to really have unconscious competence. Now remember, I'm looking for this and that, overnight low and here. These are my targets for the open to get long if I cross above them. So when I open, and I'm still thinking, we're going to come down here. So right here, there's nothing for me to do. I'm looking for the long out somewhere, and there's no precision in this. I get my VPOC migration. So right here, I'm going, well, there's more volume here. So this now is support, and this is a vulnerable location. So when I'm looking at this trade, I'm going, well, is this too low? Because that's what it says. Now, what it says is always maybe. So let's look. Too low. Now, right here, when this shifts, this is a moment, a decision moment. Because right here, if it comes this way, then we can definitely come down and do this. What does it do? It does the opposite. Right here, I got to get long. So I get VPOC migration again. So this is a long. Now, this is very aggressive entry. Me, not so much. So I get long. As soon as this happens here, I'm long, and my stop is under here. Very palatable long. Yesterday's high, overnight VPOC is a scale to get risk neutral. I get VPOC migration. This says higher. You know, you're seeing a process, guys. So let's walk through this together. Too low, and I don't use indicators. What am I using? Volume. Why? Because it tells a story. What is going on here? What's going on is the shoppers, who are the participants. Think of this like going shopping at a store, supermarket. And the S&Ps start out here. Now you can't buy them here anymore. They raise the price. You can't buy them here anymore because of the demand. Now they put the price up here. We leave it because of the demand. There's more volume here. This means the buyers and sellers are interacting. They're accepting this price. We move away from it. It's too low. Overnight mid, 83% probability. Next target. So just longs. There's nothing else going on here. Overnight high. Next target. And what was the big kahuna? 4250. The microcomposite volume point of control, which is the higher time frame level of that and that. And that was the exit. That was the end of the trade for me. Just bing, bang, boom. You know, I was like, oh my goodness. You know, and I say, oh my goodness, because who knows? Now, I'm going to show you something else. Might as well while we're here. Any questions on the longs, by the way? How are we doing in YouTube, guys? You getting something out of us? This is auction market theory using a volume profile, structured trading based on TraderLab processes. It's about building the business of trading. Please give a thumb up if you're visiting, and you're finding this interesting. One of the things, I'm going on 45 years of trading, and I think I've done most of the things that are out there, when I managed dollars back in the day, I built trading systems. So I kind of went in a number of different areas, but I was a big believer in the mathematical aspects of this and putting more into something. I had a belief that with more stuff, indicators or derivative indicators, many different variables coming in and optimizing them, that I could squeeze the risk out, and get more certainty. And that was kind of belief in systems, and I'm sure systems work. What I found was I was always kind of chasing the market from behind, because to do optimizations, you got to take a chunk of data, go backwards, and then do what's called walk forward testing. So you might be actually a month behind trying to fit the market in the box that already happened, but that was what you had. So I built systems, and that was kind of how they operated, So, but that was the process back, and this is back in the early 1980s when I was doing this. So over time, I kept looking, and I kept finding, and I coined a term for it. I kept waking up in the same place. In other words, my metrics would look good, and then I would re-optimize, and I had it on a schedule like every 2 weeks. And then I got down like to every week. So I was constantly trying to get in alignment, but the market doesn't work that way. The market is in the moment. It is always evaluating what's known, and then will change its valuation when new inputs come in the market. So it's what we all know, and then new inputs, and then the auction takes place to take a new input and then evaluate it and then make an adjustment. If interest rates change, valuations will change. If an economic report comes out and the market was not anticipating it, then it has to put that input into the market, and the participants then auction to kind of come up with, what do we think of this thing? And that creates our volatility and movement, And what is the thing about today? The market was long. What else about today? This was our target. So I was out here. Now you see, this is the high of the day. Did I know that? Nope. And what is this? This is another high volume level. So these are my targets right up here. And I think there might have been one other one up here. But there's a confluence of targeting. Let me just see if I can see what's up here. A single. These are profile terms. I won't go into them here, but this is our primary target based on the volume. So whatever happens, happens. Now, out of the trade, park. Now let's look at it coming from the other way. Now, right here, you could be done and you could go to the pool. And traders in Trader Lab took a short here too. Let me show you. Now, everything you do, if you're in the business of trading, is not what the market will do. What it might do. That was the basis of the longs off the low of the day, which, of course, nobody buys the low of the day. And this is the reason for this target. But what happens here at the target? Well, the buyers are here. It's looking great. We're having a good time. Now, I'm going to show you something. Look at the alignment. Now, this is the high of the day. There's no precision here. Don't you wish? I'm going to start showing you some stuff, as they say, stuff. So this is a mic right here, by the way. Look at this. I'm going to put another little line over here. I want you to see something. So this is a consolidation. And what a consolidation, all it is, and I think of these as stores. It makes it very simple psychologically to think of this like a store. This is going down the street to your local store to buy a product, can of tuna, ice cream Saturday night for the movie, whatever it is. And what you might notice about this is what a consolidation looks like, right? And I'm just going to outline this. And if you look at this, and this is how the profile operates. If you look here, and not here, just over here, what this is showing us right here is the chop. Then we break high. What's inside of this, and here's the high volume, it's there, is the retail price. If this price in the consolidation is too low, we break away from it. And now we start to do consolidation. That's basically all this is. This is not complicated. Now, let's do this again, but let's do it up here. I just want you guys to see how you might slice and dice the enchilada. So here's the volume in the microstructure. Now, nobody knows, it could just do chop, chop, and break high, just like it did here. Chop, chop, break high. Chop, chop, break high. What this is telling me is, yeah, we got our buyers. Here I see a seller. Okay, wonderful. Seller here. Sellers are up here. Buyers are down here. There was a seller there. They were absorbed. There's buyers here. Off we go. Too low. I get sellers up here. This is why this stopped here. And there's the icebergs. Order flow. And I get the sellers here. But what happened here? These buyers took on these sellers. The sellers are absorbed. It might seem counterintuitive, but when you see a seller and the market goes the other way, the passive side was operating in here because we see the aggressors. We don't see the passive guys. That's the limit order book. So if you look over here, these are the passive ones. They're just hanging out. Hey, I'll wait for you to come over here. I'm not that interested. Oh, but I will buy it back here if it comes on sale again. That's what's going on right here. And then the buyers are still in control. So this volume is too low. I'm just giving you the sense of how it works. Up here, chop, chop, chop. What are we looking for? What do we get? Uh-oh, break. Where's the volume in here? What happened up here? These buyers were absorbed. These buyers were absorbed. Selling iceberg. Sellers take over. Huh. Change. What happens here? I come back to what? The volume. This is the auction. This is what's beautiful. I mean, to me, it's a beautiful thing. Might be for you, because if you want, it is not, the market is not your indicators. Your indicators are an output of price or derivative. This is the market right here. So with order flow and structure and the volume profile, I'm seeing a confluence of behavior. I come back here. Now, right here, my buyers got absorbed. My sellers, you see them, took over. The buyers that were here absorbed these sellers. I have my buyers. I come back to where my sellers and my volume was, where my sellers took over, and what happens to my buyers? They are absorbed. My sellers take over. My buyers are sitting under here. The buyers absorb the sellers. I see a buyer here, and I have nothing here. Remember, my buyers were here. I rotate back up. My sellers, which were active here, absorb the buyers. I rotate down. My buyers are here. I rotate up. Where do I come back? To where my sellers took control. My buyers are here, and my sellers are selling against the volume. The buyers try again. I have my icebergs. My sellers take over. Notice the structure. This is a structured trade, and you got alignment. You break here. Where are you now? You just broke out of this. This is too high. This is a potential short. This is a short if you know your stuff. And if you don't know your stuff, this is a short, but you have higher risk. It's not terrible. It's a couple of points. Now there's more. You're going to say, really? Yes. What did we do here? The sellers took over. Where do we pull back? Where was the volume? It is here. And where's the outside edge? There. There. Too high. Sellers. Break. Too high. No buyers. Break. Microstructure. There. Short. 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 I should say, sorry, there. Short. Short. Or nothing. And where's the stops? By the way, this right here, very important. Is everybody with me? Now I'm off the longs. It is now, and why? Primary target. This is another target, but that doesn't matter. This is the one that mattered to me. And there's no way to predict. The only way you know is when the behavior changes. And yes, but along the way, you can monitor in fractals. In other words, time frames. This is an intermediate time frame target, right? And there's no precision. I always say horseshoes and hand grenades. And right here, going to the moon. The difference is, notice the behavior here, continuation. Notice the behavior here. Can't get over it. Can't get over it. And right here, you're still, you don't have to be doing anything. You could just be sitting here, and when it breaks here, now you got more structure. It's all up to you. Break here, you got structure. Here, you got structure. Break here, right back there, you got structure. VPOC migration. I'm going to, right here, this is very important. I'm going to label this. And now I'm going to look up, do you have questions, guys? And please give a thumb up if you're in YouTube, Trader Lab, if you have any questions about this, the transition from the longs to the shorts. Do you have any questions? How you doing in YouTube? By the way, if you're visiting in YouTube, these trades are available to you. There's 60 PDFs of these that you can download. There's a link in the bottom of YouTube. They look something like this. Circles, arrows, these are actual trades I've taken. I mean, these are the trades I developed these over many years. I mean, many, many years. And you're welcome to them. There's no plug and play, by the way, in trading. Everybody wants the secret sauce, a little printing press in the basement. I always say, mechanical trading does not exist. At least it doesn't for me. I trade something called context. So I know the levels. I don't know how it'll manifest itself. So it's all random. Casinos don't know how the cards will come out of the deck either. So it's all random. No, I don't see any questions, so I will move on. Please give a thumb up in YouTube down at the bottom, and there's the link if you want to visit the Trader Lab. It's a great community. It's for serious traders. If you're not looking to build a career in the business, then, some traders are just playing a video game, and that's okay. But that's not what the Trader Lab's for. So Trader Lab is really, I think, a different experience for traders. There's accountability to each other. We call each other out when we make errors. We question. We post screenshots, winning trades, losing trades. Nobody has a monopoly on brilliance. There's no holy grail. It's a lot of work. If you want to differentiate your outcome from most other retail traders, you got to commit to saying, I'm going to build a career. Now, what does it take to build a career? You're not here to play here. You're here to build the business and then bring it here. So you do the work outside of trading hours, and you find a trade, and you can use those 60 PDFs I just showed you, which you can access through the Trader Lab down at the link in the bottom of YouTube. You pick one, and then you find out how to build out an edge, and then you develop the discipline to actually execute it. This is the process. Now, if you're in a hurry, then that's okay, but then Trader Lab is not for you. I'm just telling you because everybody's looking for the holy grail secret sauce shortcut. That's a derivative of FOMO, if you want to know. So this is VPOC migration. What this suggests right here is this is the new retail price in the developing daily time frame. There's two possibilities right here. Now let's put this in perspective. We got our primary target. We see the change. The sellers are aggressive here. We see the fall out of this consolidation. These are fractals, I call them. And out of this one, we come back and test too high, too high, too high. Notice this shifts up. This right here is conflict. Right here, it's either going to blow through and the trade is going to be done, or we break under. If we break under, it's put your helmet on. Now you have the VWAP, the mid. What do we anticipate here? I anticipate retail trader behavior. Buyers here and a possible bounce here. I'm in my short. I'm holding, and here's what can happen. We get the mechanical retail buyers at the VWAP in the mid, and they can be right, just like in the casino. They might win. I don't know. But I'm risk neutral, and my job now is just manage the trade. Where does the trade fail for me? Up here. So I could be out here or up here, and then I'm just hanging out. So we get the mechanical buyers. I don't come above here, which is my resistance now. Remember, this operates like that, operates like that. Okay? So this now is too high. I take out these stops. Now remember, the market is long the last couple of days. So when the market goes up, it goes up to go down. Why would it go down? Because it already went up, and all these longs that are in the market have sell stops trailing under us. So once we come down, then they are on the hook. So now we are going to start adjusting our volume point of control, our VHVNs, to the down auction. So everything that's part of the up auction, I'm going to be removing now because I'm in a new auction. So VPOC migration. You might notice that Remember what we were doing as the VPOC was migrating up. We were using it for longs. Now we have too high. The VPOC is migrating down. This is a structured trade in the Trader Lab if it's part of your plan. Same trade from the other direction, VPOC migration. Longs on the hook. What else do we have? 70% probability of getting here. So I checked this, I bounce here. Is this too low or is this too high? Well, I know the market is long. I also, at 9:30, I have a statistic called the IB stat. And there's over a 90%, it's actually about a 98% probability that we'll take out either the first hour's high or low. Given that we made the high early in the session, I think in the first 15 minutes it was, I'm aiming for this. So when this breaks, pulls back, and I have a stat that has over a 98% probability to take this out wherever that is, I'm going, and it's now 9:12, and that stat comes into play wherever the low is at 9:30. This is another short. This was an ad. Now you get your scale, and now you're hanging in here. What is this? VPOC migration. Does this look familiar? IB stat. What do you see? VPOC migration. Now, I took this. I took this. I took this. And why am I taking shorts here? Too high. New retail price. IB stat at 9:30, which is here. So the IB low is here. Short, going for wherever that might be, and I don't know yet. Now I'm right. I got 10 minutes, and I have this low right here, right there. And I'm going, well, I've got my IB stat. I got a 98% probability I'll take out the first hour's high or low. Past performance not indicative of future results. Who knows? Here's the other piece, guys. Where am I? I'm under this price, which was the fair price from yesterday. So in the developing time frame, too high, developing time frame, too high. Yesterday's time frame, this was the fair price. We're now below it, too high. So too high, too high, too high, too high. All these are shorts in the Trader Lab. Take going for this, and then helmet. Now I have another target under here, and it's 56, and I posted this on trade 11, 12, 13. It's just a range. There it is, actually. Now, this is interesting here. I actually talked about this in Trader Lab. By the way, do you guys have questions? So this is the area for the target, 11, 12, 13. So my short, I'm out of my shorts now. So, and then we'll talk about what comes next after this. This is the short sequence. Any questions, guys? How we doing in YouTube, guys? Adrian, the those stats, if you're interested in the stats and plus the 60 PDFs of the structured trades and the library of webinars, this is exclusive for Bookmap Discord Trader Lab participants. Use the link in the bottom of YouTube. There's no cost to access the Trader Lab, become part of the community. You know, I think it's, what do they say, power in numbers. This is leverage, guys. You know, the idea of the Trader Lab is there's too much work for one of us to do. I share all my structured trades that I've developed, and there's no cost for that. And all the library of webinars, no cost for that. But you got to understand how these pieces fit together. It's not just take this, go, see you later. This won't work. This is really about learning how the market works. This is not, there's no indicator. I don't use indicators. In a way, I kind of do use them, but not the way they're traditionally used. Most of us are using, why do we get a software toolbox? Anyone, pick any of them, and they have 100, 150 indicators in there. Why? Did you ever stop to think why? I mean, don't we only need a couple if any of them actually work? So why do developers add more and more and more and more and more? And you could spend the rest of your life, quote, looking for the right mix. And that's what retail traders tend to do because they don't understand how the market works. They come into this business, they get a software toolbox, and they're enamored with all these lines and wiggles and things that cross over. And here's the thing. The problem is you could flip a coin and have a winning trade. Everything works randomly. And we think when we see random behaviors and we see patterns, by the way, because the mind tends to see patterns, even if they're just random patterns. And then we spend our time and energy and we work hard. I worked real hard over the years to make them better. And the thought is, if I make this better, it'll work better. That's logical, right? So when it shows up next time, I'll get that 20-point rotation. Well, along the way, while I would get that 20-point rotation sometimes, there might be 6 losing trades to get the 20-point rotation. What it meant was it had no edge. So then I would go back and look at it and say, well, if I tuned and tweaked and this and added this to it, then, I'm making a smorgasbord. And what I was doing was curve fitting, and I had no edge. And then I did it with systems because I thought the solution was to just have more of that, but let the computer sort it out. And look at those statistics, winning, drawdowns, all this kind of stuff. What was the max draw? And it would all look great on paper, but it continually broke down. And I coined a phrase called Trader Groundhog Day because that's where I was. I was waking up in the same place. And the idea, if you work hard, you'll get it, is not the truth. I worked real hard. And I didn't get a successful process. I got an intermittent process that I would watch decay. So I was constantly re-optimizing. And I had to do it that way because I traded over a large number of asset classes, so bonds, S&Ps, grains, metal, whatever it was, currencies, a lot of currencies and stuff. So I had to have a system, but it was always came back to the same place. So when I started trading for myself, I got much more interest in spreads. I did a lot of currency spreads, grain spreads back in the day, all kinds of stuff, interest rate spreads, just anything you can get your hands on. So, but what I'm saying about it is over time, I kept searching and I found Market Profile in about 1985 or 86, somewhere in there, right? Somewhere in that time. And I learned Market Profile from Peter Stottlemyre. So anyway, let's come back to the trade. So the trade is a short, right? And then we have this. So this is the target for me, and I'm out of the short. Now let's look at this. Let's continue along. VPOC migration. Notice something consistent here. What is consistent? Too high, statistic, target, who knows, back to the VPOC. I'm not paying that. This is the language of the market. I speak market. I don't use indicators. I interpret. Now, right here, this is problematic right here. We come across. Now, the thing we're trying to do was get here. So right here is the last place. And right here, as soon as you have this, if you didn't cover in here, look at this, 7,000 icebergs. I think I can't remember anymore because I post all through the session when I can. When I have a trade on and I'm managing the trade, it's not the same as stalking the trade. So if I'm stalking a trade, I don't look at the chat. But during the day, I'm posting in here, if I'm in cruise control or don't have a trade, then I'm very active in the Trader Lab. And the activity is not saying do this, do that. It's saying observe. What do you see here? What's the context? What is the condition of the market? In other words, it's instructional, but it is about helping traders think. This is process oriented, not indicator oriented. So in my process, I'm seeing this, and I'm seeing all this absorption. This is how order flow can help you. So I'm seeing the absorption, and I'm coming down to a target. Now, remember, targets are horseshoes and hand grenades. I don't know. I can't predict anything. Can you predict anything? If you can, come to the Trader Lab and show us how to predict. I cannot predict. I can suspect. I can anticipate, but I cannot predict anything. The opening trade, I anticipated this. Where did it go? It got here. Is that close enough? Well, there's no precision. So I anticipate, and then it ran away. So I have my setups or structures for triggering, and that's what got me in the longs and then up to the 42.50. I don't know about you. I'm okay with this. That's over a 20-point trade. How many of those do you need per day? Not including scales. And then the short coming all the way back around. How many of those do you need? Now, a lot of traders think if they get short term and, quote, become a scalper, not only does it give you the dopamine and adrenaline fix, that somehow if you go for shorter targets, it becomes more profitable. I'm going to suggest, again, subject to the individual, the skill set, and what aligns psychologically, that's not where the business is, really. The business is in the big rotations, because we're going to take stops. If I'm running 2 to 3 point stops, I want the 10, 15, 20 point trades. That pays for my cost of or overhead to probe for locations. Okay. So anyway, here, and then you're looking for this. So anyway, so let's look at the difference. VPOC migration. Right here, this is a warning. We come across, this is too high. So think of this as resistance. We get VPOC migration. I got to stay below this. Right here, looks like we're all in good shape. What do I see here? I got my 7,000 icebergs. I got absorption here. So all this absorption is buying. This is how order flow can help you. We come down. I see the sellers here. Why is it not going down? Absorption. Sell stops coming out, buying icebergs, absorbing. Now, no, and this is my location, remember? 11, 12, 13. And that was posted in Trader Lab quite a while ago, actually. Pull back. Now, right here, this is having a problem, if you haven't noticed. So if you're going for this, now the way I kind of do this is it doesn't matter to me if, I don't sit here rigidly, because the market is flexible. The market cares less about anything. It's participants. Remember, it doesn't matter. So this is what I know. I know my buyers are here. My sellers are here. No buyers above here, selling icebergs. Buyers step in again here. There's my icebergs. I get a reaction again. We come up here, I get some buyers. Sellers are here. Sellers were here. Buyers are stepping in again. I see my icebergs, but we're going lower. I come down here. I see my absorption again. Look at the absorption. This is how order flow in Bookmap can help you. Now, I can't say when I'm seeing this that it isn't just going to keep going. That's not what this does. What it's doing is showing me that there's absorption, which means buyers. And who are the buyers? Icebergs. Look at them all. So this is saying, this could be a problem. What do I know? Let's look about what we know. Too high, sellers were here. There's volume going over here. This is now the retail price, and now I'm rotational around it. I'm directional coming here. I pull back. I get more directional, but now it's chop. It's getting weaker. There's a fight going on here. I still don't know what's going to happen. I get my sellers. Let's go. Pull back. Let's go. Absorption. And now what? Now the stops are here, here, above here, VWAP, mid. That's what I know. So that's what I know. Now I'm going to label this a variable high volume node. And I know the possibility exists after I squeeze out the current shorts. Maybe I'll come back here. So let's see what happens. We have a structured trade. Actually, look at that. Didn't even know. There's a structured trade here. It's called VWAP or mid to VPOC. Now, this is another structured trade. Why would we look at this trade? The market is short. We squeeze them out. We come up here. We see our absorption here. And I'm going to take you into the actual trigger for this. By the way, this is a structured trade. It's called VWAP to VPOC. Now, the VWAP is here. The mid is here. What's at the VWAP? Stops. What is at the mid? Stops. When do I get into this thing? I have to have a trigger. What else is out here? Let me take you back here before we get this. What is out here? VWAP and mid. What else is out here? Low volume node. Outside edge is here. Outside edge is here. IB is going to have stops. There's going to be stops in here. So this is an outside area. So just remember this area. I'm going to put a little mark here, actually, just so you know where it is. It's about here. This is called the low volume node. And all it is, it's the same thing I showed you earlier. It's an outside edge of a consolidation. Remember, these little rotational deals here, this is a consolidation. On an outside edge of a consolidation, there's no volume or low volume. Here's an outside edge, low volume. So it happens in all time frames and fractals. So low volume is here, then we have high volume, then we have low volume here, we have low volume here. So what they do is they bracket the consolidations. So now we get our squeeze. Here's our low volume. Here's our mid. This is alignment. Now, again, clueless. Now I'm going to show you the trigger. Is everybody following? How you guys doing? By the way, if you're visiting in YouTube, there's a thumb down in the bottom. Please give the thumb up. Question above Red Hill. Let me see. $56.38. I'm going to stay with this. I'm going to answer that after the stream for you. Remind me if you don't hear anything from me. So before the market gets here, I know this is an outside edge. I know the mid is here, and I know the VWAP is here. We have a structured trade in the Trader Lab called VWAP or mid to here. And it's called, now let me explain what we got going on here. Might we agree at the moment in the developing time frame that the trend has gone from up to down? That's number one. If the trend as we perceive it is now down, we may not want to get long. We might want to use counter rotations and squeezes for continuations short. Maybe? And now, what is the context? Context is king. It's the number one element that traders have a hardest time understanding, defining, and staying in alignment. Everything is built on top of the condition of the market. So in multiple time frames, remember 4250 was our target going up. If it's too high and we reject it, which we did, then no more longs other than counter trend trades. But the better trade might be, and I'm not saying it is, to get in alignment with the trend. So if the trend is down and we get this, what is that? What is that? Is that a long? Well, it could be if it's your plan. My plan, and I'm not saying it's a good one, I'm just saying it's a plan. I'm waiting. We all work together on plans in the Trader Lab. You'd be surprised. There are traders who are going to be buying this, and then other traders who will be letting the squeeze happen and then waiting to get in alignment to come back here. The specific context is down, and this is called mean reversion. This is a plan in a plan. So you only take shorts. And again, I'm not saying that's your plan. I'm just saying this is me. And reason is, why would I only take a short? Because the market's long. Why is this happening? We're squeezing out the weak hands. If I come back to mid and I have a structured trade, and let's think, what is mean reversion? What's too high? What's too low? What's retail? In a fractal. Let's come now to the fractal. And Red Hill, ask me that question again. I will try to answer it, or I'll DM you. So right here, it's chop, 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 right? And as far as I know, chop, 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 going higher. Chop, 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 no break, going higher. Going through the moon, Alice. Well, let's label this. And let's go a little further. I'm at my location right here. So right here, I'm going, because right here, I'm above here and I got this. What's at the mid? Stops. Do I want to step in front of the mid? Not really. For me, and it's just me, I have a preference. It's like, get the stops. Then I want to see the behavior. What do I see here? Sellers. What do I break? I'm going to draw you another little line here. You're going to find this interesting. Get over there. You get the idea. Where's my volume? It's here, and there's another piece of volume right there. So here's what I have. I have micro volume. I have a seller. I break under this, and I'm under this. So this is too high right there in here. And in this one, this is too high. I break under it. You see the selling? And I have location and I have a target. Now I pull back and I test my volume. This is a short in the Trader Lab. Your stop would go here, or your stop could be, above here. That's up to you. I'm at my outside edge of this, and this is retail. This is called mean reversion. Notice where I come back. Just watch. Notice where I come back. You see the symmetry. You see the behavior. This is Trader Lab structured trading. These are structured trades. Not saying it's anything anybody should do. There's your target. Now, you hold. There's more. Whoop. And so this is our retail price. So this is the trade. It's here with a stop over here. It's here with a stop over there. It's there with a stop over there. It's a scale in there. Now you can do the following. You can be done with this trade. I don't have a problem with that. It's about a 10-point trade. This is Trader Lab trading. I'm not, at least the way I operate, I'm not risking 3 points to make 3 points or 2 points. I'm risking 3 points to make 10, 15, 20, whatever the market offers, or take a stop. How about that? I'm still looking for this, and it doesn't matter. I manage my trade. If it takes me out, I go on to the next trade. This is important now. We're ping-ponging right here. So this might be too low. However, if we get under here, this is the next target. Questions? This is Trader Lab. This is trading in fractals. This is about trade plans. understanding how the market works, why it does what it does. There's no get rich quick. There's no holy grail. We all take stops. We all have losing days. That's it. Notice our icebergs. This is the absorption. So here's the thing to understand about this behavior. Are we going to get more? Now, there's an iceberg right there. Are we going to get more absorption here? Or are we going to work through these buyers and then move lower? The fact that these guys are sitting here is material, but it doesn't mean we can't take them out. So you cannot, in my opinion, and it's only my opinion, not necessarily should be yours. Everybody's different. This is not a reason to get long. It's a reason to be aware. It's a reason right here. We really want to get under this and to go further this. So as you know, this is by target and it never has to get there. So it's trade management. That's all you got going here right now. Trade management. If this is too low right here and I can't get below it, then I'm going to chop. So this trade, you can do whatever you want with this trade. You could just say, I'm done. You could, and it's all a matter of how you operate. This is a microstructure right here. See the seller, see the seller, see the test. So right here, you could be out of this trade here. Once we take these guys out, sellers are active here. This is all part of your plan. So what do I know? Maybe too low. Right here, what happened? Icebergs are absorbing. What about up here? Sellers were active here. If I come across here, the trade can be over. Let's take a look at this together. And please give a thumb up in YouTube. And by the way, low volume node is where? It's right here. What is this? A distribution. You see it? Where's the outside edge? Here. And it's at the IB low. So we have a couple possibilities here. Let me mark this for us so we don't forget it. This out here, this is actually a Trader Lab short. I have a problem with this because of this. So it's not a good trade for me. The good trade is the short off the mid and back to here. This is also a structured trade, but it has more risk. And the reason, and this is actually a trade right here. This is a structured trade. I'll tell you the problem with the trade, and it's up to the individual, is this is the mean, and this is mean reversion. This is right here. Now, if you took this trade, what you're trying to do is come down to the low. See? So this is a problematic short. And it doesn't mean you can't take it. But the problem with this trade is stops are sitting out here. And you got the iceberg. So I find this a conflicted trade. I would have a very tough time taking this. If I took it, really, it's got to be with a shoehorn. And I know there's stops, and I'm crossing above here, which sets up two-sided trade, rotational trade. So this is a trade I would not necessarily get involved in. It doesn't mean it won't work. You see, that's the whole thing. But this is my mean. So if I'm trading outside in, I'm only going here, the high volume. Whether the VPOC was here or not, it's this, here to here to here. This down here at the moment has a high volume node here. That's too low. How do I know it's too low at the moment? Because here's your consolidation. Same process. Too low, too high. Retail. If I break away from this, and now the low volume node is here, so the outside edge, I think it's off a little bit here. I'm bracketing the consolidations because the market will rotate around these things. And if the one below is too low, this one here, I can come back and check it or only come outside and then do this. So this is an aggressive trade to be short here. And you would be going like to this because this was too low. And you see the reaction. This is not a trade I want to participate in. It's a problematic trade for me because I'm really threading a needle with this thing. We can see the structure. You see it where the sellers took over and we got the test of the volume micro, which is right there. You can see it, right? But this is my obstacle. So I can't enter here. I need this. And I can't even enter there. I'd probably be getting in over here or even here for all I know. I got to be scaling here. That it just doesn't fit my risk parameter for me. And if the market does the Acapulco cliff dive, that's fine. It doesn't matter because what's my job? Risk management, taking trades that have an edge. Do I have an edge here? Here's what I have. I have everything except this is the highest volume for the day, and I'm shifting upwards, saying potentially this is too low. I tested it here. I got absorption. Potentially too low, too high. This is my range, so I don't have a trade here. And here's the thing I have to be okay with. If it drops out of here and comes down here, and my mind is going to go, gee, you coulda, right? Hindsight. And then my FOMO and my emotions are going to be triggered by it. But what's more important? It's not this one trade. It's thousands of trades. And over thousands of trades, this might not have an edge. It might work this time, but it may not work enough times to justify the risk. What I found for me, and it's just me, I only talk about myself, everybody's different, is that my risk generally to take this trade right here in this condition, even if it goes to the target, is the same as the 20, 30 point trades. Do I want to take the same risk under these conditions? It's just a question. And I do see a short. I do have an obstacle. So that is my thinking. And it's conflicted because there's part of me that wants every trade and every opportunity. There's another part of me that says, where's your edge in this? So that's the question. I don't have the answer for you. The answer lies in the trade plan, not what'll happen on this trade, because I can't predict that. Does that make sense, guys? And please, if you're going to give a thumb up, please do it in the bottom of YouTube, where it has the link if you want to visit the Bookmap Discord Trader Lab. You're all welcome to that. There's no cost. And you're all invited to Trader Lab. By the way, this stream and many others are available exclusively to Bookmap Discord Trader Lab participants to review, reverse engineer, and think about it. I mean, I'm thinking about trading all the time in the sense of how can I do better? If I take this trade here and I get paid for it, is that more problematic than not taking it? Ask yourself that. If I take this trade, which is a structured trade, not qualified, see, this is the thing. The trade is a trade that we take in Trader Lab. What is the problem? This is the problem, the behavior here, suggesting potentially too low. See, there's, as they say, the fly in the ointment. Now, what happens if we just drop out of here and go wherever, and there is a target down here? I mean, this thing could theoretically, and the word theoretically is part of everything, get down here. And then I'm going to emotionally go, you should have taken it. But I found, and I'm only talking again about me and my experiences, it's not one trade. You grade yourself not on the outcome of one trade. you outgrade yourself on following your plan. My plan says I have a trade here that is not qualified. So if I take it and it actually drops out of here, which it might, a lot of things say it will, but I take a trade that is not qualified. Have I advanced my career by rewarding behavior and reinforcing that my plan can be violated? Or that's like the casinos going, let's make up a new game. Let's play 10 cards with our blackjack this hand. Let's see how that turns out. Or do we just keep playing the game that has the edge? I have found that when you have intermittent or inconsistent behavior, now you're becoming a gambler, and you're not playing the game like a casino, you're gambling. So I have to let this trade go in spite of what I think might happen. What I have found is what I think doesn't mean anything because it's random. And when I think this is a good short and I quote should take it, my plan says if you take it, it is an error and you will now, pay a consequence for it. It's called an error cost calculator. I found over thousands of trades, and in a career, you're talking tons of trades. One trade is not material. It's the discipline to adhere to a trade plan that actually will keep you potentially in the business, assuming you have an edge. The business is actually executing the edge, not making it up, not breaking your rules, not taking blackjack and make it a 15-card game because why not? How about this? You have a losing trade. Do you trade the same trade when it shows up exactly the same way? If it's exactly the same setup after you took a stop, or do you change your behavior? Do you now bail out right away because you're trading the last trade? Are you in the future, anticipating the future based on what happened in the past? Or is every moment unique? Have you determined how to behave and treat every moment as unique? Do you understand why our emotions take control of us and why we lose self-control? Do you realize that the casinos don't change the game when a gambler walks out with a suitcase of cash? We do. How can we expect to be in a business where we're not operating consistently, where we understand and acknowledge and accept that there's overhead in business and cost of production? We're not running from the cost. We have to embrace the cost because by paying the bills, we have the opportunity to extract a net profit. How do you reframe this? Now, here's the other part. How do you get control? How about by knowing that you only participate where you have an edge, and you have statistics that tell you have X% of getting risk neutral, which means a minimum 2-lot configuration. This is a minimum Trader Lab process. And again, up to you to vet it. If you know you have a 60%, and I'm making a number up, yours may be higher or lower, 60% probability of getting risk neutral. Does that give you, and it's tangible, does that give you the courage when that trade shows up to put the trade on? And yes, you'll take full stops. But if you have an X% positive expectancy to get risk neutral, that makes it tangible. The emotions are still going to be there. But when you have a trade plan, you open your book to the plan and it says, this trade has X% positive expectancy to get risk neutral. Does that help you manage your fear, which we all have? By the way, the fear is wired into us. It's the fight and flight, and it's in our DNA. It's subconscious. It's part of that reptilian thing. It's our consciousness is on top of that reptile brain, or that very primitive brain that protects us from danger. So our deal is you hear this, maybe the saber-toothed tiger in the forest. You're out on the savannah, you run the other way. You don't really got to think about it. You're not thinking about it because as you developed as a species through natural selection, if you will, Those who figured out what the rustling behind the tree was and ran the other way, or the hissing of the snake, survived. Those who didn't get it didn't make it, and they got eliminated out of that selection process. So we have that in our wiring. So it's always active under the hood. That's why you can intend to do certain things, but in the moment, it's like somebody else is actually doing it, clicking the mouse. There's somebody else. I call that Hyde, Jekyll and Hyde. Hyde is the primal wiring. And willpower is not the solution. I tried it for years. I was thinking of going to a cattle prod, behavior modification. I had a thick rubber band. If you get the mail in the U.S., they put everything in this thick rubber band. So I had a load of rubber bands, and I would snap them. Didn't work. So I figured out that I had to do something else. This is your outside edge of the distribution. Remember, this is a very dangerous trade right here. So this is, again, a trade I can't take. And this can do the Acapulco cliff dive right here. I suspect it might. I don't have a trade. I can't trade it. I just have to sit here and go, well, what's next? This has everything for a short, except this. Interesting, isn't it? Remember, if you're in YouTube, you can access the Trader Lab. You can download those 60 PDFs of these structured trades. This is a structured trade. It doesn't qualify. And I'm going to tell you right now, I'm having an emotional response to it because of the conflict. There's the FOMO being triggered right now. And then there's the no, it's not in your plan. Follow your plan. Yeah, but it looks like, does that mean I can predict what's going to happen? No. It looks like it's going to go down. FOMO. I don't want to miss it. It's going to go to my target. I know it is. It's going to go all the way to the value area down here. The opposite side, value area low. What's my statistic, you're asking me? Oh, I have a statistic. 71% probability I go here. Past performance not indicative of future results. I want to be short. I'm feeling FOMO. I have a location. I have a structured trade. I have an obstacle in my face. What do I do? If I take this trade, I have to be scaling here. I got to use a shoehorn on this. So I'm having that, experience right now. If you're in Trader Lab, are you guys having that experience? The short alignment FIRS was the micro composite VPOC 42.5. Do you see the dilemma? So this is your outside edge of this distribution. So this is a trade I can't take because of my plan. Notice you heard me talking to you, and I want you to understand about this. This is not a trade my plan allows me to take. My experience suggests lower, you see? So what do I listen to? I listen to my plan, not this one trade. Because over time, by the way, this is the outside edge. So what this is right here is what you got to do is, I see the problem with this trade is I cannot sell it here. I can't get into this thing until probably here or, in here. Well, I got no range, very little range. I mean, it's like using a shoehorn, and it's not that I couldn't take it, but I want to show you guys discipline. Now, if you're adept and you can read the minutia, you can trade it if you have the range. Here's the thing about this trade that's most important. It's getting risk neutral, most important. And this is where you kind of run into your obstacles right here. And then the outside edge is this, you see? Where'd we come? This. So here's what can happen. This is called mean reversion, outside in. And then if we don't break under here, you can come back here, and then you're just going to do this. If we fall out under here and here, then it opens the door to this target. That. So you guys can watch that. And I have to tell you, based on the way I trade, if I don't take this, I'm okay with it. If I do take it, I have to be able to get risk neutral. And I don't want to generate bad habits for anybody here. So I'm just wanted to show you the trade and show you that your trade plan is what regulates how you operate. If you have the ability to operate in this kind of fractal or time frame, then it's your trade. If you don't have the ability to do that and operate in this fractal, then you don't have a trade. That's what a trade plan is. That's much more important than this, even though I think it's going wherever it goes. And the thing is, I can't predict where it goes. That's the other joy. It's just random, you know. Remember, casinos cannot predict how the cards come out of the deck, how the gamblers play the cards. They can predict nothing. They can only use structure or anchored inputs. If you're interested in this conceptually, I have a webinar I did, and it's in the, if you use the link in the bottom of YouTube, you can visit the Bookmap Discord Trader Lab. There's no cost to become part of that community. There's a primer webinar. It's got over 30,000 views. I guess it's fairly popular. You know, I'm not a vendor. There's no course. There's none of this, oh, you got to pay. You know, no, you don't do that. Because you got to do the work. Nobody can hand you a red light, green light process. The business of trading just doesn't work that way. And there's all these, quote, influencers, whatever you call them, gurus. Anybody, you know, can stream, right? And in hindsight, tell you how great everything is. It's not the way it works. In fact, if you come to Trader Lab, and there's a library of webinars, I've got some of them in there almost 5 hours long of real-time narration. Come and watch it in the real time. Now here, I only have an hour and a half, and I try to get into real time, you know. But I have found that what's more material to help traders is to see the development of a process, how it unfolds, how the auction operates, why levels are important, why indicators might be a problem, because traders think the business of trading is indicator based, and in reality it is not. It is participant or auction based, and indicators have a place. But if you don't understand why these are shorts only, or why this might be a short if it fits your plan or not, or why this could be your target and why this could be your target, then your indicators then are not doing you any good. Please give a thumb up in YouTube. Thanks for visiting the Trader Lab, guys. Hope you got something out of this. If you're interested in the Trader Lab, use the link in the bottom of YouTube. There's no cost for that. You can watch the webinars. You come to Trader Lab, download the 60 PDFs of these structured trades, reverse engineer them, and there isn't any one way to trade. It's the way where you extract an edge, and then it's up to you to develop the discipline to, when the trade shows up, do the trade. But you need to know before you ever put a dollar in the market that you have a statistical edge. That is the business of trading. Thanks again, guys. Please give it a thumb up. And remember, these streams are available exclusively to Bookmap Discord Trader Lab participants to reverse engineer, review. I watch them, and I learn from them also. Because I'm always thinking, just like everybody else, how can we do better? And remember, the 11, 12, 13 areas of target. And then if we get down under there, I have an extended target. These are not trade recommendations. It is the value area low, and it's around 97, 98-ish. Just saying. Thanks again, guys. Look forward to seeing you soon.